there are three stocks in the market that caught my attention recently where insiders have been snapping up shares over the last couple of weeks. So we're going to go through each one of these three stocks. And if this is the first video you've watched of mine, my name is Justin Linderink. I've been an accountant for about 20 years, but I'm also a passionate investor. So I'm trying to find companies that have really five different characteristics to them. So first off, making sure I understand the business. Secondly, making sure they have some kind of competitive advantage. Third, I want to make sure they have a long-term growth in front of them so they can compound over a long time. Number four, trying to find companies that have really good management. And number five, trading at a margin of safety or basically under their intrinsic value. And I'll have an intrinsic value for each one of these three stocks, at least how I'm looking at them. So let's just jump right into this. And this is not a recommendation to buy or sell any stock. This is just my personal opinion. I thought they were kind of interesting. So hopefully you get some value out of this. If you do, smash that thumbs up button. Really helps out the channel a lot. So for this, we are actually going to use a website called dataroma.com. This is a fabulous website. You can actually track super investor portfolios. You can actually see insider buying that's kind of going on. If you actually scroll down towards the bottom, it'll kind of show you the last couple days where insiders have been buying up shares. At least these are companies that super investors own that insiders are buying up shares here. So it's kind of interesting. So definitely play around with this website. I think it's pretty cool. So the first one that really caught my eye is Intel, INTC. And this has certainly been a company on my radar for quite a while now. All right. So we could see here there are several different super investors that own this stock. And if we scroll down, you can see towards the end of February, the CEO, Patrick Gelsinger, and a director bought a bunch of shares worth, I guess, $500,000 for the director and about $250,000 for the CEO. So you're talking about $750,000 worth of stock that they bought up. Now, I will say, even with the previous regime before Patrick Gelsinger came, it definitely seems like every year at the beginning of the year, the management tends to buy Intel shares. So take it for what that is. But when insiders are buying stock, it does catch my attention. So I don't really pay attention when insiders are selling shares personally. I do pay attention when they're buying shares. When they're selling them, you just have no idea why they're selling. It could be a multitude of different reasons, but when they're buying shares, you know that they're just trying to make money overall. So if we go take a look at Intel, we'll go over to Ticker Terminal. This is a website that I personally use. I like a lot. If you're interested in it, I have an affiliate link down below. They have a free version and they have a paid version. And if we take a look at the stock chart here over the last 5 years, looks like it's been up only about 33% in 5 years. So that's only a CAGR of about 6%. So it definitely has lagged the market overall. In fact, if we look at a 10-year chart, not a whole lot going on. Looks like the low point might have been $20 back in November 2012. But I mean, you look at the last 5 years, it's pretty much flat. In fact, it might be longer than 5 years, around 4 years, I guess. Pretty darn flat overall. Now, if we go take a look at some estimates on what analysts think companies going to do over the next few years, I found this pretty interesting. So I guess first off, let's take a look at what they've done historically. So this is about 7 years worth of information. So they've only grown about 4% per year for revenue. That's about it. If you look at EPS, it's grown about 11%. So certainly EPS has grown almost 3 times what has revenue done, but not great growth overall. Now, if we look at Ford, analysts think they're going to do in the future here. So they think revenue is only going to grow just under 6%. They think EPS is actually going to shrink about 4%. Free cash flow is going to go down 8.6% overall. So this is pretty interesting because with this company, they're putting a lot of money into their CapEx. So I don't think it's really fair if we take a look at free cash flow specifically. This line right here, if we go back to 2017, they were around 10 billion, 14, 16, 21. And then they dipped down to 11 billion this past year. If you look at that, there's fluctuation. Obviously, it went down by half for 2021, but they're putting a lot of money back into the business, which is decreasing their free cash flow. In fact, analysts only think it's going to be around $1 billion for 2022. So a huge, 92% drop overall. So it's really, really important to understand this company and kind of what's going on. So to be really so to really have a perfect idea what's going on, I think you have to read the 10K and really dig into the CapEx on what's going on. Really look at CapEx maintenance to figure out what it's costing to maintain their capital expenditures versus what the growth is. But let's go to do a valuation on this company real quick. And we're going to use my discounted free cash flow model to do that. Let me bring that over here. All right, so I'm doing 3 different projections here. So I'm doing like a passive, a conservative, and then aggressive approach. A stock is trading at $48. So for the conservative approach, I'm saying it's going to grow 6%. And this is free cash flow. And keep in mind, analysts think it's going to drop. But how I'm looking at this is saying, okay, they're putting a lot of money into CapEx, future growth. Their actual real free cash flow is better than what analysts think it's going to be, because a lot of that's going to be for future growth. And then drop down to 5.5% and then 5%. So that's over a 10-year period. So that would be an average of roughly 5.5% growth for that. So based on that, I have an intrinsic share price of $50 and it's trading at 48 today. So pretty much in line. I don't think it's trading much under the intrinsic value. On a low case scenario, I think it's around $40 a share. High case scenario, it's worth around $60 a share. I think the X factor to all this, well, I think 2 things. One is Patrick Gelsinger. I think he's a really great manager. I think he's a great CEO. He's been with the company for a couple of decades. He actually left and went to VMware. I think he was a CEO of the year of 2019. So if there's going to be someone that will turn this business around, it's going to be him. My issue is when I look at AMD specifically, who's been eating into their space, how is Intel going to slow the bleeding? But that's more based on what they've done historically. And like I said before, if someone really wants to buy Intel, I think they need to dig into the 10K and really look at that CapEx maintenance piece and there to determine really what the true free cash flow of the business is. But based on historical and what analysts think, this is kind of where I think the stock should be worth today. All right, so next up, let's go take a look at another company. And it is PayPal, ticker symbol PYPL. Several super investors own this company, and there's actually been quite a bit of buying going on. So this stock has had a lot of volatility. In fact, we can go up the stock chart here. Yeah, so look at the last year. I mean, they got all the way up to over $300 a share, and right now it's trading at $106. So what is that? It's almost like 60, 70% drop. And there's a few reasons for that. One, I do think it got bid up too high, a lot of the fintech companies. And then recently, what really dropped the stock price is that they released earnings and they lowered their guidance going out into the future. And it really has to go around eBay. So PayPal has been the #1 payment processor for eBay. In fact, they were actually spun off of eBay, I think it was in 2015. And eBay has finally figured out, hey, we can actually create our own platform again and then use that for payment processing. So people can still use PayPal on eBay, but it's not the first option that pops up. So the revenue from eBay has gone from 10% down to 3%. And historically, PayPal has actually grown, and we'll take a look at it in a second, but I think it's been around 17, 18, up to 20% growth on the top line, and that's going to be dropping to around 16, 17%. So that's why we saw this big dip and stop. But if we go down here and look at the shares, you can see there's one, just in February alone, 1, 2, 3, 4, 5 different buys, looks like 3 different people. You're talking, looks like around $3 million worth of stock total here. So quite a bit of buying that's going on, President, CEO, and looks like a couple of directors here. So if we go back over to ticker terminal real quick, let's take a look at PayPal. Look at the stock chart. Look at a 5-year chart like we did for Intel. Intel was only up about 33% in 5 years, so it's a 5% CAGR. PayPal, different story, up 153% over 5 years. That's a 20% CAGR. So even with that huge drop that we've seen over the last several months, if you've had the stock for 5 years, you've had a really, really nice return, definitely beating the market overall here. Now, if we take a look at what the company has done historically real quick, you can see on the top line growth is around 18% over the last, looks like 6 years. EPS growing 23%, free cash flow about 20%. So really, really, really good growth. Now let's take a look at what analysts think this company's going to grow over the next few years. That's what's great about Ticker Terminal 2. The free version, I think you get 2 years worth of analyst estimates. The pay version, which I have, is 5 years, which is nice. All right. So they actually think, still 19% growth on the top line over the next several years, and they think EPS is going to grow around 20% as well. Free cash flow is going to grow around 22%. I personally think that's high, and I personally own PayPal. I think that is pretty high. I've kind of guided out, and we'll take a look at my valuation here in a second, but I'm guiding out, I think, like 16, 17%, something like that over the next couple of years. I don't think it's going to be as high as this. If it does, that's great. I do think they're going to have some impact from eBay, but keep in mind too that they recently are on the Amazon platform as well. And I think Venmo is growing quite a bit. So I think PayPal is in a really good space. And we go take a look at valuation real quick for PayPal. Let's see. Here we go. Here's a free cash flow model. Again, today it's trading around 126. I don't think that is correct. What was it trading at? It was trading at 106. Go back here, 106. There we go. All right, so what I'm saying is growth rate is 15%. So management, keep in mind, again, is saying 16 to 17%. Over the next, a couple of years, but I'm thinking 15%, and then 12.5%, and then 10% discount. Multiple is 18. I forgot to mention before with Intel, I think I had around a 14 for Intel, if I remember correctly. Intel tends to trade at a lower multiple. If you look at PayPal has traded around 30 to 35, has kind of been their normal. So I'm willing to do a little higher than normal. I usually like to be in the 14 to 16 range, but I'm going to use a exit multiple of 18 for PayPal. So based on that, I think intrinsic share price of $153 in the middle, at the very bottom, $110, on the high point around $200. So even in the bottom end, it's trading at $106. I think it is worth more than what is trading at today, which is absolutely phenomenal. And based on my inputs here, you're talking a 5-year CAGR of free cash flow around 14%. That is really fantastic for a company that's growing, that is also really well run. I personally think they have a fantastic management team. So that's PayPal. Last one, let's go take a look. And I got to say, this one I really had not dug into much until today. So I don't know as much about this company, and that is Sherwin-Williams. So ticker symbol SHW. And Sherwin-Williams is a company that most people would recognize. They make paint. And if we take a look at, there's 3 super investors that own this company. And you can see a couple of people have been buying up shares, about $750,000 worth of shares in February. Looks like the CEO and the CFO both bought shares, interestingly enough. So we go take a look at Sherwin-Williams. So if we look at a 5-year chart, 148% up in 5 years. That's about a 20% CAGR overall. They have dropped in stocks. They went from about $350 a share. They're down to about $260 today. So I'm kind of wondering, is that that's about since the beginning of the year. So it's actually dropped about 26% year to date, interestingly enough. All right, so if we look at what the company has done historically. So on the top line, they've grown about 9% over the last 7 years. I look at EPS, it's grown about 15% in there. Free cash flow growing around 11%. Overall, if we look at what analysts think this company is going to do over the next few years, so they think revenue is going to grow about 4%. They think EPS is going to grow around 8%. Free cash flow around 10.5%. So certainly from a free cash flow standpoint, they think it's going to be pretty close to what they have done before. So if we go take a look at a valuation for this company, and this one was interesting to me. And, maybe someone that knows more about Sherwin-Williams than me can jump here and kind of talk about it. But when I'm looking at the company, this is kind of even high growth rate. I'm saying 18% over the next 3 years, then drop down to 12%, and then 7.5%. So what is that? That's an average of 12.5% over the next 10 years. It's pretty high. So I'm actually kind of maybe being too high for conservative standpoint. But it still comes out to an intrinsic share price of $187. And then low, it's $136, and a high point, $254. Now, what's interestingly enough is that Sherwin-Williams, we go back and look, and this really surprised me from a valuation standpoint, has really traded at a very high multiple. So if we look at EPS, so this line right here, 26 up to 35, down to a 20, up to around a 35. Let's see, 44, 30, 25. So 25 to 35 has been their normal, but based on what their revenue has been, I'm really shocked at how high that their PE has been trading at. I don't understand why the market is having them set at such a high multiple. And just keep in mind, from a historical standpoint, the market in general is traded around a 16 PE. So this is really surprising. I would, if the company trading around a 25 to 35 PE, I would expect their growth to be, at least 20% or more on the top line, 20% or more growth. And we're not seeing that. So tell me in the comment section, if you own Sherwin-Williams or have done a lot of research on them, why do they trade at such a high multiple? It makes absolutely no sense to me. Coca-Cola, for example, trades around that same type of multiple, but Coca-Cola has such a strong moat. Not saying Sherwin-Williams doesn't. Certainly most people know Sherwin-Williams, but paints, there's so many different paint brands that are out there. I don't know that Sherwin-Williams stands out more than everybody else in that type of market. So that one is really confusing to me overall. So yeah, it does not even at the high range, it seems like it's trading above what that is. But I'd love to hear from you guys. What do you think about Intel? What do you think about PayPal? What do you think about Sherwin-Williams? Do you own these companies? Do you want to own these companies? What do you think of my valuations here? Again, I personally own PayPal. I do not own Sherwin-Williams or Intel. So thank you so much for watching. I really appreciate it, and I'll catch you guys on the other side. Take care, and God bless.